Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, the bell goes and it's the crude impact. So HP, BP are the ones that, and IOC are the ones that are leading the pack. But I must read out the Nifty itself, 1/3% higher. So that's fresh all-time high.
And I think that some of the global headwinds will kind of resurface sometime towards the end of this year. So I think keeping that in mind, you're still going to see this market behaving in a pretty narrow way.
The Apex Court under Article 142, it has now allowed for, in fact, round 2 of bidding for as far as JP Infotech is concerned.
12 points higher on the Nifty, 11,462 is where we read on the Nifty, and about almost 38,000 on the Sensex, 83 odd points higher.
Momentum so far seems to be continuing, and we're holding close to record levels as we speak. The Sensex is above that 38,000 mark. It's about a 0.25% rise on the Nifty.
We're a range-bound day and we're ending more to the lows.
I think suffice to say that first test of 11,500 has failed.
The bulls maintain their firm grip on Dalal Street. The Sensex ends about 38,000 for the first time in its history. Mid-caps, small caps, banking stocks outperform the benchmark indices.
Corporate banks like ICICI and Axis lead the Bank Nifty rally. Fall in crude prices, lower yields and strengthening of the rupee cheers the index.
Midcap index rallies 0.5% after 2 consecutive days of being lower. PSU banks like PSU Bank's DLF and PFC top the charts.
Supreme Court allows the second round of bidding for JP Infotech but bars JP Group from participating in the resolution process. Directs the constitution of a fresh committee of creditors with representation from home buyers.
Page Industries and Nalco post a strong first quarter. Both gain 7% in trade. Meanwhile, NMDC sulks after reporting below par numbers, ends the day 6% in the red. Well, those were the top 5 stories which in a way defined the day. Dalal Street had strong momentum, ending at new records. Hello and welcome to a fresh new edition of Markets Today Talk Back. This is the show where we tell you about the 6 odd hours of trading action in just 5 stories. I'm Prashant Nair. With me today is Ekta Batra. Hi, Ekta.
Hi, Prashant. Well, thanks very much for that. Over the next 30 minutes, we're in fact going to talk about those 5 market stories. And our guests will answer all of your stock queries as well. Joining us to answer all of these questions are IIFL Sanjeev Hasin and Mitesh Thakkar on the technicals. Thank you, gentlemen, for joining in. Well, before we get to talking about all of the queries that we've got, Prashant, turned out to be another good day.
Oh, a very good day actually, because just 20 points on the Nifty, Ekta, but mid-caps and small caps have resumed their rally. But actually, I should say that they never really went anywhere. So last 2 days, especially day before yesterday, it just looked like a clear pause. Yesterday may, to some, have seemed like a bit more of, well, it was the second day that, the rally had kind of fizzled out, although from lows they picked up. But today they were back with a roar. I mean, almost 1% of the small cap index, mid cap index, 0.5%. That really was where the action was. But there was other corners of the market. Banks, for example, look at that. PSU and private sector banks. Nifty Bank up almost 1%. The big gains, of course, were in the public sector banking space. So, I mean, they'll come up on your screen. Dana Bank, IOB, United Bank, Union Bank, Bank of India, Oriental Bank of Commerce, all rallied hard. I'm not even talking about BOB and SBI, PNB, the bigger banks, PSU banks, which did well, but I'm just highlighting the top gainers, and they were some of the mid-tier kind of banks. Private sector banks, look at what's happened with ICICI, Axis, something like an IDFC bank. So again, big gains, especially corporate-facing private sector banks. The two names are ICICI and Axis, which have done very, very well. And as they rise, we are seeing more and more commentary from sell side, etc., saying, well, I mean, some of it is, we told you so, that they were poised for a rally, and some of it is saying, well, they've got a lot more to go. We'll see, but they'd had strong momentum. Well, heavies which lost, Bharti was lower, Cipla was down, and there was an ONGC which was down about 2% as well. Now we come to broader markets, and I'm just going to talk about gainers. There were losers as well, but by and large, it was an up and up kind of day. So Page reacting to numbers, 7.25. Nalco 7.25. Again, earnings. DLF 6 odd % higher. It's back at 200 levels. from 175 not very long back. Bandhan Bank was up 5%. Kaveri Seeds, Nagarjuna Construction, Capital First, Tejas Network, Sobha. I can go on with more names, but basically you get the idea. And by the way, all of this was happening in the backdrop, especially the second half after Europe had opened, of not very strong European markets. I mean, Europe has not been doing well today, but that didn't sort of deter the broader markets and the Nifty as well from doing what it did. Ekta.
Okay, well, let's in fact find out what our guests make of the markets today. Sanjeev Bhasin and Mitesh Thakkar are with us. Well, Mitesh, let's start with you. Based on the kind of momentum that we've seen, what would you recommend on the Nifty as well as on banking stocks?
Yeah, good evening, Ekta. I think since morning, I've been saying that I'm not very clear in terms of an entry immediately on the Nifty. I think we've had a rally for about last nearly 3 weeks now. And the only way to trade it is that if you're holding the Nifty, hold it with a revised stop at 11,380 on this spot, which is about 90 points lower, or wait for that 50-60 point kind of dip to come in to buy with a stop below 11,380. So I think for the timing, I think we've met all the targets of around 11,480, 500 on the upside. I think, the idea is to keep holding the positions if you're a position trader, or wait for the dip to enter.
Okay, Mitesh, thanks very much. That kind of sort of sets us up for the next headline. And this essentially is the banks. I mean, and they were sort of, pushed higher by strong macros, the general sentiment that growth is picking up. Corporate earnings have been generally good. Nifty Bank ending the day almost a percent higher. Remember, fallen crude oil prices, lower bond yields and strengthening of the rupee also helped the bank's cause. ICICI Bank, Axis Bank, IDFC, etc. were some of the top gainers, rising more than 4% apiece. We've got callers. Questions, Ekta?
Yes, absolutely. Well, we have S. Roopchand, who is calling in from Mumbai, and he has a question on Kotak Mahindra Bank. Hi, Roopchand.
Hi.
Hi. Go ahead. What's your question?
I wanted to invest in Kotak Mahindra Bank at the current prices. Is it a good idea, or should I wait for some fall? Because it seems to be going down slightly.
Okay, let's get both technical as well as a fundamental view on this. Sanjeev, you go first. We actually had a very similar question on our Facebook Live today, that is it a good time to actually enter Kotak Mahindra Bank?
Well, Kotak numbers were very, very below expectation, and that's because of the realm of that 801 and free, no balance accounts and the freebies which they were, giving to get more CASA deposit. So numbers were definitely weak, and right now, like you said, the flavor is more on corporate banks and PSU banks, where there is a lot of beta to be made. It's an expensive bank. It's been an outperformer. So if you want to stay in it, you may get, relative returns. But, we think some of the other banks will give stellar returns from here to end of the year. So Kotak Bank is a buy with a longer term view. In the shorter term, we think that there could be other banks which can outperform.
All right. Mitesh, what would your view and recommendation be on Kotak?
I think a similar outlook. One, I think, it's done a good rally, and therefore I think, if somebody wants to enter afresh, I think wait for some kind of dip to happen over here. My sense that the stock might cool off, and we might see levels close to about 1200, which is not much, 6-7% downside from here, and then consolidate. So I think in that sense, I think, it's still good levels to accumulate. But between the two, if I had to choose something, right now, maybe I'll go with an Axis Bank, and I think I'm putting a target of 750 on a conservative basis for the next few months on Axis Bank. I think the stock is just breaking into all-time highs with long-term charts now showing a lot of momentum, which means that for many next few months, the stock will make higher highs.
Okay, we've got one more sort of question on a bank, IDFC Bank. By the way, IDFC Bank also did very well today. Arvind P. from Gujarat has written in with a question on that. He's been holding 5 shares of IDFC Bank at 80.
IDBI
Is this IDBI?
Bank.
Okay, or IDFC, sorry. IDBI Bank, I beg your pardon. I misread that. 5 shares at 80 rupees. I want to know whether to hold or sell. Mitesh, why don't you take this one as well? He's a short-term investor.
See, I think IDBI, not much can happen over here. Maybe it can go up to about 70, 72. It's started some kind of an up move already. And I am looking at targets close to about 70, 72. Not sure that we'll see levels beyond that. So anything close to about 70 should be an exit. And I think, as I mentioned earlier as well, I think shifting from IDBI to Axis might be more useful. I think at least a 25% upside happening in Axis very soon. Maybe even higher levels can be tested.
Okay, all right. Well, let's get to the third headline for today then. Midcaps bounce back in action after underperforming for the last 2 days. The index rallied 0.5% and was led by PSU Banks, DLF and PFC, which were all up between 4 and 7%. Let's get in a couple of queries then. Sanjeev Tulsian has tweeted to us with a question on PFC. He's been holding 5,000 shares of the company for 1 year and wants to know the target, what the target would be in 6 months to 1 year. So, okay with holding it, I guess, for 6 months to a year. Sanjeev, what would you recommend factoring in the fundamentals of PFC?
So, Ekta, it's been a relative outperformer from the recent lows of 67, 68, and we think that the worst of power sector woes may be priced in. We have an important judgment today from the Allahabad High Court on extension of norms which were very stringent by the RBI, and I think the parliamentary panel on energy has also suggested that if we do get a reprieve, we think that could be a win-win shot for PFC. We have a year-end target of 125 on PFC and 155 on REC. We think there's an 8% dividend yield, and most of the bad news is already there. These could be very good proxies for most of the woes settling down. So I would say hold. You could get 125 by March 2019.
Right. Mitesh, I mean, has anything changed? As Sanjeev pointed out, stocks are off the lows. I mean, quite a bit from the recent lows. REC also from 90s at 115. But in terms of charts, has anything changed here?
I think, there has been some bottoming formation around the 70 mark, and the first target which we are looking at is close to about 90, which we should do very soon. But I think eventually the stock would head towards targets of 103, and then good chance that 110, 112 can happen. I'm not sure of upsides beyond that for the time being. So I think I'll suggest a hold with targets close to about 110 if you give it about another 3 months or so.
Okay. All right. Well, quite an underperformer year to date. Take a break now, but we'll leave you with some market opinion from Nilesh Shah of Envision Capital. Let's listen into that and we'll be back.
I still think that the retail participation has kind of come down significantly. Global investors continue to be cautious on emerging markets, including India. And I think that some of the global headwinds will kind of resurface sometime towards the end of this year. So I think keeping that in mind, you're still going to see this market behaving in a pretty narrow way, pretty much like what it has been for the last 4 to 6 months. I think the biggest risk right now is global. Somewhere down the line, I think the global markets are kind of showing some bit of calmness, which I think can probably end up being a bit unnerving at some point of time. We've seen these, the corporate banks continuously say for almost now 3 years, and every quarter they come up and saying that the worst is over, and by and large everything seems to have factored in, but every quarter you kind of end up seeing that the slippages continue. Overall, I still think that there could be pain for maybe another 2 or 3 quarters or so. I think the insurance space looks the most attractive right now at this stage, and that's purely because of, the reality is that India is highly underinsured. We are underprotected, so to say, and clearly, if I were to kind of look at the next 5 to 10 years, I mean, this as a sector could be probably 5 to 10 times of what it is today. We think that cement looks to be a good contrarian bet right now. We believe that the housing activity is going to pick up further momentum. Infrastructure construction is going to kind of do a lot more a year later, and it's quite possible that private capex will probably start picking up a year down the line, and we think that probably cement is the best proxy for all of this.
Let's get to the fourth headline of today. The Apex Court today ordered a fresh round of bidding for JP Infratech. However, it barred the promoters of Jayaprakash Associates from the resolution process, but that's not all. The Supreme Court bench has also ruled that a fresh committee of creditors comprising of home buyers must be constituted as well. Shares of both JP Associates and JP Infratech plunged more than 4% on the back of that news. Ashmit Kumar joins in now to give us more details on this. Ashmit, go ahead.
Well, today's order from the Apex Court has come as somewhat of a mixed bag as far as home buyers are concerned. As to why that is, we'll explain in just a bit. But first up, as far as the big takeaways are concerned, it's time now for round 2 as far as JP Infratech resolution is concerned. That's the big message that the Apex Court is sending out. Let's take our viewers through the fine print. First up, the Apex Court has extended the period for resolution by 180 plus 90 days beginning today. Secondly, what the Apex Court has done is that it has sought to widen the COC. Keep in mind that in light of recent amendments, home buyers have been given the same status as financial financial creditors. So now effectively what the Apex Court has done is that it has directed for the COC to be widened and for the home buyers to also secure a seat there as a part of that COC. Further, what the Apex Court has said is that JAL or jail, neither one of these two companies, neither JP Associates nor JP Infratech, will be eligible to bid as far as the second round of bidding is concerned. Both of them have been kept out of the scope of the bidding process. What has also been directed is that the RBI has been given liberty to proceed with insolvency proceedings against JP Associates. So that, in a manner of speaking, comes as a bit of a setback. As far as the 750 crore rupees was concerned, the amount deposited by JP Associates, that amount will be kept invested and will be now under the purview of the NCLT, which is the big takeaway here. The Apex Court remanding this entire insolvency proceeding back to the NCLT, which of course is the bone of contentions with even the home buyers. The home buyers ideally would have sought for a Supreme Court appointed monitoring committee or a Supreme Court oversight mechanism to be maintained, but the Apex Court has disposed of the matter, has now put the onus on the NCLT. So clearly all eyes now, as far as JP is concerned, will be on the Allahabad NCLT. Back to you.
Okay, well, thanks Ashmit for that. Let's move on to a query then. Sanjay has tweeted to us with a question on JP Infratech. He's bought 10,000 shares of the company at 13 rupees a piece and wants to hold it for 6 months. He wants to know if he should hold or sell. Well, Sanjeev, it's always a tough call in stocks such as these, but what would you recommend?
So it's a glass half full or half empty. You know, if you came to selling the assets and stripping them, the fair value will be not less than 10 rupees of JP Infra. However, you know, right now it trades as totally distressed values, and given the NCLT and the order, there will be a little bit of to and fro. I still think that sum of parts, once the sales takes place of the assets, you could even get a fair value of 10 rupees. However, in the short run, we would recommend get out of this, get into some better names on the consumption side, like a Page Industry or a Bata or a Nestle or an ITC, you know, where you will still stand to make up your losses over a period of time.
Okay, that is JP Infra, essentially the company which is under the scanner. Now, the other question is on Jaiprakash Associates, which is the parent. Remember, the Supreme Court, as Ashmit pointed out, has said that they've sort of left it to the RBI. It's up to the RBI whether to direct banks to take JP Associates to the NCLT. I mean, that is really the big question in the case of Jaiprakash Associates. Will the banks, in their wisdom, decide to take JP Associates to the NCLT? So far, banks have actually gone to the RBI and said, well, we've got a deal, restructuring deal with Jaiprakash Associates, so please don't include Jaiprakash Associates to NCLT. After the court verdict, will that be changed? Let's take that question. We have Rajashekhar GV, who's got 1,800 shares of Jaiprakash Associates. His cost, he bought the shares in August of 2017 at 27 rupees a share, and wants some advice whether he should hold or sell. Sanjeev, again to you. What will you make of this?
So Prashant, I was early on your show also, and I was telling you that the fair value of JP's assets is far higher. However, the caveat is that it is in this imbroglio, it stands to lose value on the land holding part. Now it is the holding company of JP Infra, and hence there will be a little bit of collateral damage. But like you rightly pointed out, it is in the process. It has been in the process of reducing its debt, and that is now within very, very manageable limits. That's the reason most of the banks do not want it to go to the NCLT. Sum of parts, JP's actually fair value could be closer to 25 once all these resolutions are out. The company is in the process of getting back to its bread and butter business of construction of hydropower, all that basic thing of construction, and the other businesses or the verticals like cement, power, and all will add value to the share price. Right now it trades at distressed valuations. The cup is half full or half empty. I would suggest, if you are desperate, try and get out and get into L&T, which is again going to be a proxy to growth on the corporate capex and so on. That could make up your money in a shorter period. If you are willing to sit through the pain, then JP may actually give returns over the next 1 year.
Okay, all right. Well, let's get to the fifth and last headline for today. Let's shift our focus to earnings. NMDC sulked in trade after posting what was a weak set of numbers. Revenue slid 15% from last year. Sales were down 26% on a year-on-year basis, and operating profits also saw a decline of 5%. The stock ran up in anticipation but saw profit booking today. Additionally, the street was cautious on a show cause notice received from the Chhattisgarh government related to excess mining.
Page Industries, also known as Jockey India, ended the day 7% in the green. This is the company reported a good set of numbers for the first quarter. Its net profits came in at over 124 crores. EBITDA came in at 189 crores, beating street expectations. Revenues, though, missed at 815 crores.
Aluminium maker Nalco's net profit jumped fivefold to 687 crores for the first quarter of 2018. The stock ended the day over 7% in the green. Revenue came in close to 3,000 crores, double of what the company reported last year, along with EBITDA margins of 34%. Again, 3 times of what Nalco saw last year. Okay, well, let's get in a query then. Varun Patel has tweeted to us with a question on Nalco. He has 800 shares of the company at 74 rupees and is a short-term investor. Wants to know if he should change his portfolio and would like some suggestions if he should. Mitesh?
See, Nalco, I believe, with today's move has started some kind of an uptrend. So at least an upside about 80 to 82 is on the card. So roughly about 10% upside could happen very soon. So in that sense, just hold for a few more, maybe a couple of weeks, and then you might want to exit around 80, 82. And in terms of changing, I think whenever he wants to invest, I think I've just recommended ICICI Bank. I think that looks the strongest placed bank on the medium to longer term charts, which I would recommend.
Okay, we've got one more question. This is on Page Industries. Rohit Jain has tweeted to us with a question on Page. He wants advice on whether you should buy the stock for the long term and whether you should do it now. I guess Page Industries. Sanjeev, you want to take this? What would you tell him?
Well, there is very little to speak about it, Prashant. I've been tracking this stock and holding since 750 rupees, 2008 to 2007, sorry. And, this has just been a big multi-bagger. I still think the numbers were way ahead of the street estimates. I don't rule out a target of 35 to 37,000 in the next 1 year. Now, the pinch of salt is that the stock has already run up non-stop from 25,000 to today's high of 32,000. Look for declines, but if you can, then you'll be laughing your way to the bank over the next 2 years.
Okay. All right. Well, we have time for a couple of more questions. So I just want to pose a question to Mitesh. Mitesh, SBI is coming out with numbers tomorrow. It's always a very critical set of numbers to watch out for. How would you tell investors or retail guys who want to take a position in State Bank of India, how would you tell them to approach it based on the run that we've seen and the fact that the numbers are coming out tomorrow?
See, SBI, in fact, for the last about 9 months now, has been doing a range of roughly about 250 on the lower side to about 325, 330 on the upper side. We are now towards the upper end of the range. But in case something really positive comes in and the stock starts stabilizing about 330, then I think it's heading towards 400 plus levels. So in that sense, I think, keep a watch. If it sustains about 330, something very positive comes in, re-rating happens, I would be comfortable buying into this one for a target of around 400 for the next 4 to 5 months.
Okay, Mitesh and Sanjeev, thanks very much, both of you, for being with us here on Markets Ready Talk Back. With that, it's a wrap here on this edition. From Ektami, everyone on the team, thank you very much for staying with us. More coming right up.